Welcome to Financial Planning Explained. I'm your host, Mike Menninger, certified financial planner, owner and founder of Menninger and Associates Financial Planning. I'm pleased to have with me today Mike Mandio, who is the Vice President of Product Development?
Production.
Well, we get the product part. It's the first.
Exactly.
Of AnnieMac Mortgage?
AnnieMac Home Mortgage. Yeah.
AnnieMac Home Mortgage. Mike, thank you for joining me today.
I appreciate it.
I've had the opportunity to speak with Mike once, and it was pretty interesting to have a very, very unique thing with their company that I thought would be really cool to tell everyone. So what we'll do is, I guess we'll take a look at what do you guys do as a general before we get into that very specific thing that you guys do.
Sure. Yeah. AnnieMac, we're a Fannie Mae, Freddie Mac, and Ginnie Mae direct seller and servicer. So we're a standard mortgage banker, independent mortgage banker. Probably work with 40 additional investors in addition to the agencies. And last year, I think we did about $6 billion in residential home fundings.
Okay. So I see AnnieMac always, I'm thinking about Fannie Mae, Freddie Mac. Did you guys intentionally kind of sort of rob the two and slam them together to make it look?
So we did, I believe. So my understanding, and if my CEO, Joe, sees this, I hope I get this correct. When Joe was building AnnieMac and deciding on a name, I believe there was a case study across several malls in America. And, Joe had a list of names and AnnieMac was one of them. And overwhelmingly, 90% of the people have heard of AnnieMac, would do business again with AnnieMac and associate AnnieMac with a good experience. So AnnieMac was the winner, right? And it was American Neighborhood Mortgage Acceptance Company, DBA, AnnieMac Home Mortgage.
Okay, interesting. Well, how could they have recognized that name if you hadn't picked your name yet?
Because it sounds like Fannie Mae,
Right, okay.
Freddie Mac, it's Sally Mae, and so on.
Gotcha.
So because of that, you took a small local company and gave them a national brand.
That's interesting.
Yep.
It's a great idea.
Yeah.
Something I wouldn't have come up with.
And now we could go from 5 employees to 2,000 employees nationwide.
So you guys do your general conventional mortgages more or less like everybody else.
Yes.
All right.
Yes, we do.
But you have this cash to keys program.
Yes, we do.
Probably find ourselves spending most of the episode talking about it, because when we chatted a few weeks ago on the phone, I'm like, dude, this is so unique. It's really interesting and really cool. So tell me about it.
Yeah. So, first, AnnieMac, we've always been an organization that, wanted to lead with value, wanted to create a platform that helped our referral partners, our realtors, our CPAs, our financial planners. And, we started with a program called AnnieMac Works, where, AnnieMac Works platform, we would provide agents, for example, home staging designation classes. We would teach them how to farm for foreclosures. We would get them certified in renovation and just various things to add value. Because in our business, you don't want to ask for a referral. You want to be able to build business and cultivate business together. So, we've always had that mindset, and I credit the leadership of AnnieMac for creating that. But about 6 years ago, we started seeing that, okay, we have thousands of agents that work with us. We have thousands of clients that apply with us monthly. And, we're seeing they're struggling to win offers, right? You have limited inventory post-COVID. You have, uncertainty in the market. And you have buyers out there that are finally find a house that they like, and there's 7 offers on that property. And it makes it very difficult to win, especially if you're getting a mortgage. They're losing out to cash and so on. So we looked at our typical client, our typical clientele, and we've realized that of the people that end up winning an offer, going to contract and submitted into underwriting, the pull-through was extremely high. So why not find a way to get more people into the process? So Joe,
I'm not sure if we say into the process. Back up one step. I must have missed something.
How do we get more people under contract? That was our goal, right?
Okay.
Because we knew as a mortgage company, if you win an offer and you're already pre-approved with AnnieMac, and we go to we go into underwriting, it's gonna fund. The pull-through rate's over 90%. So our CEO, being an ex-bond trader at Lord Abbott, he managed all fixed income funds, very, very bright man, decided why not create our own private equity firm called AnnieMac Cash to Keys Private Equity, and why not back our clients' offers with cash? So we started with just a simple program. It was called Cash Offer. And that is for anyone who is looking to buy a home with a conventional loan, right? So let's say you're putting down 5%, you have, a 680 FICO score, and you qualify for a basic conventional loan. Now that offer, when a realtor presents it, it doesn't go in $550,000 with a 5% down and a mortgage contingency. It goes in 550, no mortgage contingency, backed by AnnieMac private equity. So a seller sees that, wow, this is as good as cash, because if anything happens to the financing, there's no mortgage contingency involved. So I know as a seller, if I accept this AnnieMac cash to keys offer, my deal is going to close, whether the client closes directly or AnnieMac has to buy it, which happens very, very rarely. It's only if something unforeseen happens with the client, because again, we pre-approve them up front. So that was for just a basic conventional loan. That was for anyone who was buying a home for $1.5 million or less, and they were qualifying for either a conventional loan or a high balance conventional loan, because in some areas of northern New Jersey, New York, in different areas across the country, they have a high balance conforming limit, which is over 1.2 million. So as long as you were using an agency product, AnnieMac would back your offer with cash. So as you can imagine, we started winning almost every offer. And it caught the attention of many real estate agents in the Northeast, especially. And we decided as an organization, we opened it up nationwide. So we started with New Jersey, and now it's nationwide. We also realized that, and we got special approval from FHA and the VA, which is something that, we take tremendous pride in helping our veterans. And to be able to take someone who has their VA eligibility, who is struggling to win an offer, because in this market, when you have 10 offers, and a real estate agent or a seller sees an offer from someone putting down 20%, someone paying all cash, or someone get 100% financing through the VA, that typically gets pushed to the side, right? So
even 100% cash?
Well, no, I'm talking about 100% financing through VA. But when we back them with cash, because now it's available for VA loans, they come through as a cash back buyer. So now we're able to help them win, when otherwise veterans, they struggle to win their offers.
Right.
So, and a lot of times you hear, okay, a VA offer may not, it's a risky transaction. Well, those folks earn their eligibility, right? They deserve the chance to be able to leverage their VA option. And for AnnieMac to be able to back them with cash, it's been a game changer for that.
Why is VA considered risky?
Because a seller, let's say you're selling your home.
Right.
And you get 3 offers that are the same value, right? Both people come in at $750 on your house, for example. Are you going to take the person who is putting down very little and financing 100%? Are you going to take the person who's putting down 20% and shows that they have that ability to do so? Or are you going to take the guy who says, I'm going to give you $750 all cash?
Oh, of course. I fully understand that.
Yep.
But okay.
So VA, again, less skin in the game for most people. That's how they feel when they see these offers come through. To be able to back them with cash now makes an even playing field for them.
So you're effectively backing the VA loan.
Backing the VA loan, backing the FHA loan, and backing the conventional loan with cash.
In order for someone to qualify for something like that, don't they need to at least be pre-qualified by you?
They do.
Okay.
Yep, they absolutely do. So it's a very simple process. We take a basic mortgage application for that client, verify income, assets, and credit. And once we pre-approve them, our cash to keys team takes in another day or two, and they review the file and make sure it meets our minimum overlays. So it's just to make sure that they qualify for cash backing, and then we issue a cash offer approval. At that time, when they are cash offer approved, there's a welcome call with our cash to keys coordinators. We have many coordinators that are amazing. They speak directly with the client, so they understand here's how the offer goes in, here's how it's presented. At contract, we do collect a small fee upfront at contract signing. So that's only once they have won an offer. Okay. And as long as they use AnnieMac Home Mortgage and an approved title company or attorney, it is fully refunded. So a lot of people are like, well, what's the catch? This is too good to be true. Well, the reality is, because of this program, we've now closed over $1 billion in fundings with cash to keys, over 2,080 transactions, I believe, as of last month with this program. And it has opened up hundreds of relationships with real estate agents otherwise we wouldn't have been working with. So, to be able to back an offer with cash, help people win, we're really starting to grow our presence within the real estate community. So that was just the one program, Mike, that we talked about, was cash offer. And that solves for anybody buying a home, right? It's very simple. First time home buyer.
Does it still exist?
Oh yeah. It's thriving. That's for anyone looking to buy a home. It's super simple. You're getting a mortgage, whether you're putting out 5% or 50%, we'll back your offer with cash. Wealth advisors, of course, appreciate the fact that, this helps clients keep assets under management. A lot of people, they don't want to, if they want to buy a second home in LBI, New Jersey, they don't, a financial advisor doesn't think it's best for a client to put $800,000 down so they can win it. AnnieMac will back the offer. Finance the amount that's comfortable for you. Keep your assets under management so you can grow your long-term wealth. So that's that. Again, that was just a cash offer program. But we started seeing that solves for one piece. Well, what about all the people who have a home to sell? Right? Inventory is limited. And why is inventory limited? People are afraid, where am I going to go? If I list my house, I tried putting an offer in, I want to downsize. And unfortunately, I have a home sale contingency. No one's accepting my offer. If you're selling your home, Mike, and someone comes to you and says, here's my offer, and there's two other offers, and one says, oh, I also have to sell my house. I have a home sale contingency. You're not going to accept that offer. You're trying to sell
not for the same price.
Yeah, you're trying to sell your own house, right? So what we've done is we've taken a common sense approach. Again, I credit Joe Panabianco and the leadership, at AnnieMac, to where we will take a mortgage application, right? Standard mortgage application. Let's just say this client hasn't even listed their house yet. We'll verify their income, assets, and credit, and then we get a simple valuation on their departing residence, meaning their existing home. Mm-hmm. So let's say it's worth $500,000 and they owe a couple $100,000 on their mortgage. We will net out a certain percentage of that equity and add that back into their mortgage application as if they already sold their house. We'll omit their mortgage liability and we'll say, okay, hypothetically, if you sold 123 Main Street, what would you qualify for? Run our calculation, call it $1 million. At that point, we issue a cash offer approval. Again, they haven't even listed their house yet. We issue a cash offer approval. They can now go work with a real estate agent, find a home, put in an offer and win. And at that point, once they win, then they can list their house with confidence. So this is a program that brings buyers into the market. It brings listings into the market because a lot of people, and myself, if I were to buy a house right now, I would absolutely leverage this program because I'd want to know where I'm going before I list my house. I have 3 kids. I have a dog. It's very challenging to uproot your family, and maybe rent and then try and buy. So this alleviates that issue. So 2 things can happen when we win an offer with this, right? So we made this client who hasn't even listed their house yet a cash buyer, and we win the offer. Great. That goes as planned. 60 days go by. Let's just say they need to close like 60 days on the new property. Well, 2 things can happen. Let's say they sell their house in time. Great. We close with a regular mortgage on that new home, right? We've sold, got the proceeds in the morning, we finalize the mortgage, and we close on the new purchase. That's a normal process if they didn't have cash to keys. But let's just say we won the offer and we have to do that. That's awesome. Doesn't cost the client a penny. Second thing can happen. Let's say they haven't sold their house in time. Okay. But Mike, we won the offer on the new home. We're under contract. We really have to close on the new home. No problem. Because AnnieMac Private Equity, cash to keys is on the contract. We will buy that home for the client. The client could take immediate occupancy while they're still trying to sell their departing residence. And let's say it takes them a couple months to sell their house. Once they finally sell their departing residence, keep in mind, they're living in the new home. We will then sell it back to them at the same exact price, the new home. We'll sell the new home back to them because we had to buy it. Mm-hmm. We retain a small fee, and then they also accumulate a small rent. But at that point, they've been living in the house. We have carrying costs, of course, and they are now they now own the new home. So
does that trigger, for instance, New Jersey has a transfer tax of 2%. Sorry, actually, Pennsylvania has a transfer tax. Most states have a transfer tax. So if I bought that $1 million home, Pennsylvania being 2%, one to the seller, one to the buyer, AnnieMac buys that home for $1 million. And it took 2 months past that
for you to sell your house. Yep.
Now you're selling it back to me. Is that now incurring the 2% Pennsylvania transfer tax?
So that buyer who we bought the house for, when we have to sell the house back to them, yes, they will have to pay the transfer tax.
Okay.
So every state is different. So I'm glad you brought this up, Mike. It's as if you're in my head. AnnieMac saw that, okay, there are some states that are really heavy in transfer tax, Pennsylvania, Philip Market being one of them. So we decided to create a third program called our Buy Now, Sell Later Express program. So
we're going to save that for the next break because this is cool as heck.
Great.
This is terrific. So
absolutely.
Stay tuned. We'll be back with you in just a few moments.
Do you keep up regularly with your investments? Where exactly are your hard-earned dollars going? Are you financially prepared for an emergency?
I'm Mike Menninger, founder of Menninger & Associates Financial Planning. We believe that education and knowledge are powerful, and we want our clients to understand why we are making the recommendations that we make. It's your money, and you deserve to know where it's going. because it's not how much you make, it's how much you keep. So call us today to discuss your financial concerns. Welcome back to Financial Planning Explained, and we're talking about this really cool cash buy-in the house cash programs.
Yep.
I think it's absolutely fantastic. So you started with the
Cash offer.
then cash to keys.
Well, no. So everything is under the cash to keys umbrella.
Oh, okay.
The first program, when they don't have a home to sell, is called cash offer.
Right.
Simple, backing them
Right.
with cash.
Okay.
Second one, they do have a home to sell. Same thing. We're backing them with cash, but we call it buy now, sell later, where we get a valuation on their departing residence and we add that equity in as if it's an asset. And then we qualify them based off
Okay.
what they would
I
choose.
gotcha.
Yep.
I gotcha. So let's talk about that program before we get to the new one. So we used an example that I have a $500,000 house with a $200,000 mortgage and $300,000 in equity.
Mm-hmm.
Round numbers, skip all the little minor fees and stuff.
Yep.
I buy the $1 million property. You already know in your mind that we're going to be taking the $300,000 from the primary residence that I'm selling and putting however much I decide to put down. It may be 20%, it may be the full 300.
Correct.
Right?
Yep.
So you've already factored that in to the purchase of the new house. You factored that into the underwriting so that that's all set up. Now we buy the house and then I go sell my house and I'm good to go. And if I could sell my house in time for that closing, terrific. Now I just take that. We do like a normal contingency, but it's not contingent, but it's one of those where you're doing the swap in the same day. Fine. It happens all the time in real estate. The third program is now all of a sudden the $1 million home settles and I haven't sold my $500,000 house yet.
Yeah. So the second program is called buy now, sell later. And you're right. We calculate their equity and we assume the house is sold and we take the portion of equity that we feel they're going to walk away with. We simply add that into their assets on their application.
Okay.
And we omit their mortgage liability because we want to qualify a client as if their home is already sold. So they qualify for the max. So once we do that and they win the offer, we go to contract with them. AnnieMac Private Equity and the client go to contract on the purchase of the new home, which every state's a little different in the addendums and things like that. So we won't get into that. But once you're under contract on that new purchase, if you sell your house in time, we'll close directly with a regular mortgage. If you do not sell your house in time, at that point, AnnieMac Private Equity will buy the house for you. You will then take immediate occupancy. And once you finally sell your house, that's when AnnieMac will sell it back to you, the new home that we bought for you, once you sell your departing residence. And, of course, we retain a small fee and a certain percentage of rent for however long you're living in the house.
So let me ask you this question while we're on that. Okay. So if I choose not to move into the new house and stay in my existing house,
you would still accumulate a rent because
I would accumulate a rent
because we have carrying costs. We have to buy the house for you.
Fully understand it. So whether I take occupancy or don't take occupancy, it's the same price?
Correct.
It is.
Correct.
Okay, good.
It is. And I will tell you, people start moving their stuff in right away.
Well,
because they can.
Because they can.
Yeah. Because
or
they
they're starting to do work on the house and everything else like that. I
And
fully understand it.
Some people take their time and they don't mind accumulating a small rent. Again, the rent is accrued. It's never charged until they sell their home because we never want a client to be burdened by their current mortgage on their departing residence and a new rent or a mortgage. We don't want them paying two payments. So it's all deferred there.
So on that, so then let's say, for instance, I've accumulated over 3 months, $10,000 in rent. So what do? You just basically take that off of the
proceeds from the sale.
Right.
Yep.
That's what I figure. It makes sense.
Yep. Off
Makes
of
all
the
the
proceeds
sense.
of the sale. Yeah. And once you go to contract, you know what you're going to net out. That's when we finalize the mortgage. That's when you may say, hey, we're getting $50,000 more than we anticipated. We want to put down 30% on the new house and finance 70%, whatever it may be.
Fair enough.
So previously you mentioned, yes, there is a transfer tax if we have to buy that house. So that is for our regular buy now, sell later program. We identified that there are some states that have higher transfer tax. So we came up with a third program. So cash offer is the first, buy now, sell later is the second, and buy now, sell later express was our way of solving for the states that have high transfer tax.
Okay.
So in this situation or in this scenario, it's very similar to buy now, sell later. We just take a regular mortgage application and we get a valuation on our departing residents and calculate their equity, right? Only we will get them a bridge loan for up to 75% of their departing residents. So that loan call it $150,000 of the second mortgage, like a bridge loan. We will then use that money to close on the new house, right, as the down payment, and we get a regular mortgage for the purchase, for the first lien. So we're getting equity out of their departing residence. We're not counting that as a payment. The payment is deferred on the bridge loan for 5 months. So that client truly will be able to qualify for the max, right? So we'll close with the regular mortgage, and the bridge will close 3 days prior because it has, or 4 days prior because it has to fund, and that'll be used for their down payment. Because a lot of people, when they buy a house, they need the equity from their house, right? So with this program, this is for someone who does have a good amount of equity, right? Because we will only go up to 75%. So they have to be in a strong equity position. But this will enable them, once they win an offer, to close directly with a regular mortgage and our bridge as the down payment. And then once they sell their house and they get the rest of their equity, they have that ability to pay down the new mortgage one time and recast it.
Yeah, recast it.
Yeah, exactly. Because we know that if we're only going to 75%, they're not necessarily walking away with the amount they truly wanted to put down. We give them that ability once they finally sell their house.
So it actually fits very well in the scenario that we're talking about. I'm buying the $1 million house. I'm selling the $500,000 house where I have $300,000 in equity. What you're saying is that you're going to give me the mortgage for $750,000. But with a $250,000 bridge loan. Okay.
Correct.
And that's the 75%. So that $250,000 bridge loan gets paid off when I sell my primary residence. That pays it off.
Correct. And what happens in that instance, and not to jump in, you've now closed directly. So AnnieMac never has to buy the house.
Right.
So what that means is there's never an accumulated rent. There's no transfer tax for us selling it back because you own it directly.
Right. And not a second transfer.
Yeah. And that's why we create it. So if folks don't have a ton of equity, sometimes buy now, sell later works. If they're in an area where the transfer tax is minimal, like certain states, New York, that's where buy now, sell later works great. Believe it or not, New York.
I was just saying, that's why I looked at you. Wait, New York has a low tax.
Yeah. Lower transfer tax. Yep. So each one, we analyze what program is right for each buyer.
Interesting. So I just think about that for a moment, and it strikes me as a lot of effort on your company from an underwriting perspective, because you got to really have a good sense that I'm going to be selling my house for $500,000. When I say it's maybe not underwriting, but it's a good valuation type of thing. You need to know, do you send inspectors out to look at my existing residence to make sure I'm going to get $500,000 for it?
So we have an internal appraisal team that manages all of that. We have the clients send pictures and upload through a certain portal, and we calculate a value. And we're conservative on that value. We want to make sure that, we know the client will truly be able to, at the end of the day, when they walk away from this, they'll truly be able to qualify for the mortgage.
Right.
They're truly going to net the proceeds that we expected them to net. Now, we built something in to protect them, protect our clients, and protect AnnieMac, of course, but with buy now, sell later, if they can't sell their house in 7 months, 210 days, AnnieMac will actually buy the departing residence, the home they're selling, an agreed upon price up front. So just as an example,
Here's my 500.
Yeah. So use your $500,000, and let's say we agreed we're going to buy the house for 83% if you don't sell it for 500. So hear me out. You win the offer on the new home. We close on that new $1 million house. Your house is listed for $500,000. Month goes by. Okay. I have no action on my house. Okay. No big deal. 2 months go by. You're probably going to knock the price down to $470 for sure. Right. 3 months, 4 months, 5 months, 6 months, your kids are in the little league, your daughter's in dance, you're in the community, you're at the restaurant, you're loving your new life. You're going to knock that house down to $450, right? And if you can't sell that house for $416, as an example,
right, it's 83%.
6 months and 29 days, we're going to buy it on the 7th month for $415. So that truly will be market, right? Because you've tried to sell it for 7 months. This program actually gives our clients an out. It gives them a way to, okay, we've secured our home and we won an offer on a property we never would have won because we still haven't sold our house, right? So AnnieMac helped them achieve that dream. And then we also will bail them out if they can't sell that house in time. Or if they can't sell the house in 7 months. It does not happen often. I'm sure it will happen eventually, or here and there. But in this market, people are typically selling their house.
Yeah. Or your underwriters, not underwriters, but your appraisal team did a crappy job in appraising the value of that house at $500.
Yeah.
I mean, just saying, because the odds are, you're right, in today's market,
Yeah.
it's unlikely that a house is going to go that long and have to reduce the price
By that much. Yep, exactly.
Unless it's a very unique house, or quite frankly, unless something bad goes with an inspection.
Yeah. Or the market, or something happens to the interest rate environment. A lot of things can happen.
Wow. So now you say nationwide. Are you guys licensed? I think you have to be licensed for selling mortgages. Are you licensed in all 50 states?
AnnieMac is, yes.
All right. Yeah, well, that's good. Yep. Well, this is cool. Believe it or not, we're really closing in on the end of the episode. What more can you tell me about, because this is really cool. I think for the sake of the viewers, that's why I wanted to have you on, because, I'm a little bit in the know, and I never heard of this until, I was talking to one of your associates.
Yeah. I think, the program was built to help our clients win offers, right? And it's done a tremendous job in doing that, right? Helping buyers, have a competitive advantage, while closing with a standard mortgage. There's no additional fees. The rates aren't higher. They're closing with a regular mortgage. We're simply backing their offer and helping us close more, go into contract more often. But what we've seen, and what I love about the program, is we've seen people in different stages of life really benefit from this. There are people who are going through divorce, right? And they have a hard time, someone has to move. That client may not have time to, or that person may not have time to bid on 6 different houses and wait a few months, and they don't want to rent. Maybe they want to buy. Cash offer will help them win an offer faster. What about that person who's inheriting the home?
On that divorce, the other spouse needs to participate in this whole program to some extent, because you need their authorization for the sale of the old one.
So that was for the person who is buying a new home, right? We back them with cash because they don't have a home to sell, because they are, let's say,
right.
Is getting it. So that helps that person win. But the other person who is receiving the home, that client, they may want to move. They may not really want to stay in that home. They may have bad memories in that home. Our buy now, sell later program helps them win an offer and then list their house with confidence once they finally won, because we got them cash offer approved through our buy now, sell later program. They worked with an agent, they found a property that they loved, and then they could sell their house at their own pace, right? So this, again, the program, we love it because we can back veterans. We can help people who are struggling to win offers. We can help people who are going through challenging, divorce scenarios and things like that. And frankly, our referral partners, benefit tremendously from it, because, they can grow their business. Realtors are doubling their production with this program, and, wealth advisors are really able to implement their plan with their clients and prevent them from having to liquidate so much investments or assets under management to buy that second home, when AnnieMac will just back them with cash to help them win and, keep invested.
That's interesting. That is really cool. Is there anything else you want to share about AnnieMac or the programs that you just referenced?
AnnieMac's an awesome organization. Just very lucky to be a part of it. Great leadership, but they're innovative. As you can see, we went from program 1 to program 2 to program 3, and there's a 4th program out there for folks who don't want a mortgage at all and want to use just use the sale of their home. We'll talk about that.
Oh my goodness, that's really cool.
Yep.
Do me a favor, take a moment, look into the camera, and just tell people how they can get a hold of you or Steve Rossman or whomever. Who should they contact?
Yeah, you can contact me directly. It's Mike Mandio, Vice President of Production at AnnieMac, for the community mortgage team. My number is 845-641-0541. You can also reach me at email. It's M as in Michael, and then my last name, Mandio, Mandio, at Annie, ANNIE-Mac, MAC.com. And if I memorized Steve Rossman's number, I'd say it right now.
Well, I can always get it from me. This is pretty cool. To Mike's point, this is really helpful to individuals. It's helpful to real estate agents. It's helpful to divorce attorneys. There's just a myriad of different people that this could be helpful. And when he explained his program to me on the phone, whenever it was, I said, dude, I got to get you on the show, because this is something that is really nifty, particularly in today's real estate market, where, all you're hearing about, and it's been that way for probably 3-4 years, people can't buy and are just getting shut out. And part of it is because there's too many people, but this is terrific. So thank you very much for joining us. Mike, thank you very much for joining me. This was terrific. Hope you got something out of this, if you ever have any questions as to how this would fit into your overall financial plan, please do not hesitate to call us. Our phone number is 610-422-3773, or you can check out our website at www.maaplanning.com. Thank you very much for tuning in. Hope you have a wonderful day and look forward to seeing you in the next episode.